Good evening, folks. Welcome to the Market Internal Review for July 14th, 2023. So I'm just reviewing charts here on Sunday evening to prepare for next week, and I'm reviewing rather frustrating Friday. For this past week, we had a smaller gap up than we had on Thursday and Wednesday. More data released that apparently allowed some more upside, at least overnight. I did a fair amount of tweeting in the morning session, trying to at least provide my assessment for the internals and kind of what I was thinking in the moment. I knew it was going to be tough, and I was trying to be somewhat careful with what I put out there, just given the morning session, the way we opened and the delivery of price. So first thing I noticed was a red hot ad, and the volt band was also red. Their trends were bearish. The gap up was sustained for quite some time, but this delivery of 180 candles just back to back to back, essentially this knife and then really long wick. This was very violent. Anybody that was trying to get in longs, I think, probably just got murdered. So this was a really rough time here, and I'm just sitting on my hands because I see the average tick closures headed below zero. They're trending down. Trend is kind of flashing off and on various signals until finally it seems to be settled on balanced. And yet SPY is, whatever you call this, fighting to head lower. Just a lot of struggle. I was encouraged by TWAP starting to receive data, where we actually are having some tick data, so that was good, but just not seeing it on the price, and the bearishness of the New York Stock Exchange continued. And I'm just thinking, where is it on SPY? When is it going to happen? And it eventually did occur after what seems like, I think, about a 70-cent price range on SPY, and we get this fat breakdown here of previous day's high at around 450 and change, 450.30s. And once we get that, to me, that's not something to chase. It does technically fit my rules of break and retest of standard deviation to enter, but you're already past the first trim target here, the level 3 upper price. Then we've got the next level 2 upper from previous days standard deviation values. That'd be the next target, and it's just so fast, and there's just no way to execute for me on that, especially with options. You buy in on a candle this fat, and then you get these wicks here, and that would be just a really nasty hold. I mean, sure, you could try to average in, but it's just not what I like to do. I mean, even these candles are something a little better that I would get into, even though they're oscillating bull bear candles like crazy. But yeah, so this breakdown here of previous day's high is coinciding with an extreme closure on the bearish side, which was exciting to see because, as you know, if you've watched any of my other videos, that sets a tone for the day potentially. So get this, and I'm still watching this gap zone. I want to see 0.5 or 100% of the gap filled. Then I will assess what's going to happen after that. Are we going to retrace up? Are we going to burn right through this now? Is there somebody in here buying this gap to push higher or not? So knowing that we also had gaps from all the previous last handful of days that week, if we broke through this gap and started going lower, I figured it's probably going to be more struggle given all the other gaps we had below. So we get this, and now I'm watching, and we get we go right back up to TWAP. So at this, around this same time, we get this ad flip here. They're going for a bullish flip, ticks back over zero again, and you can see the tick delivery is just really weak. There's almost nothing here. Now, this can be somewhat common around noon, but there's still usually pretty decent price action around the TWAP to find entries to ride for even sometimes for an hour. And this candle here, I really like this. So this bear candle, we break this down and then we retest. So this is not my typical entry, but this could have been a good entry here. It's where we have one of the more, I don't even want to call this extreme, but we actually did have a 500 break on the bullish side of tick, coinciding with this down candle, which was kind of interesting. And it's the strongest quote unquote bull action we had seen on tick the entire session at that point. Now that could have sussed you out and maybe you waited because maybe you're thinking they're going to go even higher now. And that's totally a potential. But with add and bold red, I don't think so. But anyway, so the other thing I'm noticing is that we're flipping bearish again on the add, then we're bullish. And when I see that, I can guarantee you, for the most part, we're going to have a channel on the add chart. And we'll go look at it here in a minute. But it's just nasty. Even though trend is saying imbalance, the overall, it's not happening. And it's just time to wait. Reviewing this, this probably would have been a good entry. It's breaking down a previous day's standard deviation level. That's a good entry if it's the right size candle. Like this one here, this one's too far up. This is a huge stop loss if you're going to try to enter at the bottom down here. This one, that's, at least for me, that's an acceptable stop loss right around TWAP or maybe even above this candle's high price. And then, yes, you lose out one of your trim targets, but by now we filled the gap and we have established potentially that there's going to be bullish or bearishness for the rest of the day. Given we got a downward trend on TWAP, we've widened the bands, we're building a statistical model, and we've held overall the bearish price action on the add, as well as the volume is continuing to concentrate in the declining stocks, and we have more bearish tick than bullish tick, even in extreme closure for up to this point. So that is a pretty good entry, and we've already tested TWAP once and broke down. Then you've got this trim target and potentially this one, although you get this cluster of wicks that makes it a little less exciting to maybe take a trim, or if you had your actual order set, it's probably not going to hit there. I do try to have mine set a little bit before these lines or below them, depending on which direction we're going, just because I know how these levels align with a lot of other strategies. I think, and there's just a lot of theory about like whole number or quarter numbers on your orders, or 0.05s or 0.1s. So I just mix it up and I kind of sprinkle them around these areas. I'm not interested in getting the exact to the cent trims. So I probably would have trimmed out here, just given how I set my orders. But then, we do have a retracement with add just flipping back and forth. And we do not test TWAP though, and then we continue to head lower. You do get this trim definitely here, and then definitely down here. So overall, per my strategy, this was a successful day. But if you're somebody that can't help but watch premium versus the chart, if you're somebody that gets faked out often by this kind of price action, this day was probably incredibly challenging, both to sit on your hands and not trade, or if you were in a trade, to actually continue to believe in it and trust your plan. So, and I'll definitely say, like, even the internals with add flipping back and forth so much, this was a tougher read. So looking at the tick levels, it does help. So here's where you see we retested tick level that was made darn near 6 minutes into the day. It's where this fat breakdown was into previous high day. It's where we retraced, and it's where we basically are headed right after we really retest TWAP and lose it again. So then you get these tick levels, and once you see these breaking down, this is to me, it's very comforting to see that. It's like, okay, we're definitely breaking down. This was able to pivot price before on SPY, when the New York Stock Exchange hit a negative tick, it bounced SPY. But now these particular zones from earlier, they're now breaking down. They're not providing support. Same here, where it bounced this before, now it's not. Okay, and then we come back up and look at what we test. We test a previous tick level that bounced us over here from before, but it does not bounce us this time. Same thing here. This level bounced us here. And I guess you could say we reclaimed it here, but then we lose it here. So this wick here, testing this level again. So very clear, if you turn everything else off, you could probably get away with just trading off of these tick levels. That being said, these don't always work out this way, as far as we don't always have so many of them. And a lot of times when the day is cleaner, we make like 2 tick levels, maybe 3, and then we never come back to them because we're trending all day. So that's where I still recommend, at least if you're into the internals, to have all the other ones on. But yeah, so this day overall was a success. You can see basically we tested previous day's TWAP price of the 448. So that's what this is. That's basically where we landed. I guess we had that big bull candle right at the end of the day. But fascinating stuff. For that week, I want to say we retraced back into second deviation. Or first deviation, yeah. So we didn't break out a second. We retraced into first, or landed roughly right on it. And then the monthly, I don't know if I can load monthly on the 2-minute. Okay, I can. Fascinating. So second standard deviation on the monthly TWAP, we retraced into that. We were in the third. So Thursday we bounced around, oscillated, and then we finally took off, and we hit this previous month. So it would have been June, third standard deviation upper price of 449.90. We broke through that, bounced on that a handful of times, and then finally let loose below there. Qs have been insane this year. I think we're up, 45% on the year for the NASDAQ. So just an incredible year for the Qs, with tech and the AI and the chips. I mean, just there's so much that has caused this pump. It's not even funny. They have more to give up if we're going to see a pullback than SPY does, as far as I'm concerned. So when I'm looking for a market sentiment shift to the bearish side, I'm actually more interested in the Qs, but I still majority of the time I still trade SPY over Q. But when we're bearish, I may look into Qs a little bit more as far as chart analysis. So here you can see we had that same kind of bearish candle that was a test of TWAP. We did break and hold over TWAP for a lot longer than we did on SPY. We actually did a full deviation, low to high reversion. We broke right through TWAP and we wicked the top. So that's interesting. And also Qs did not have near the gap up that SPY did, and we took it way higher in the morning, and I would argue a lot cleaner. This actually was a lot nicer if you were on the bullish side, which I wouldn't blame you, even though it's insanely high priced at this point from all the previous action that week. Buying calls just seems insane, but yeah. So this is the same candle that we saw on SPY, and you notice they came nowhere near TWAP for the rest of the day. Versus SPY, we had that late afternoon session TWAP retest that still didn't hit it. So if you're in the same kind of trading strategy that I've shared in a completely separate non-market internal review video, you would have been totally fine using TWAP as your stop loss. But on the Qs, you would have felt a lot more comfortable. You see all of this This it still amazes me to see this, but all of these candles here. I mean, these previous days, standard deviation prices, they're acting like a wall here. Look at all that. Crazy. So this would have been a lot more comfortable for me if I'm watching the chart and I'm hoping my my trade works out like a handful of them have. You go here and we're seeing just such clean action against this, and look at that. Every time I see this again, it just reaffirms my belief that these previous day standard deviation prices from TWAP on the next day, it just reaffirms that they're 100% effective for building trade plans. So this was a great trade here. Break and retest the TWAP, or even here, doesn't really matter. And yeah, you could have held that all day, and you would have gotten at the best. If you're holding a runner, a 4.5 to 1 trade, you're capturing $2 and almost a $3 move. Not quite a $3 move on the Qs. That's great. And your stop, even your entry price, you're never even coming close to that. So that was a great setup. But anyways, I'm getting excited about the strategy. But so looking at this, I do think the Qs are more bearish than SPY. This is giving me a little bit more of a hint of bearishness maybe coming into this following week. IWM, I know, was a little bit weaker. Yep, they had gapped down, and we fell really, really hard. They reclaimed a little bit, but basically stayed within that 68% zone, that first standard deviation. And the Dow, that was the Russell. If I said that was the Dow, this is the Dow. Dow, wow, insane gap up, and then range bound the whole day. Okay, so with the IWM, I mean, we've seen the Russell pumping up. They had some pretty good pumps. This was a huge pump, so they lost every bit of this range that they had created. Okay, not all of it, but over 50% of it they lost. That's still really good, though. I mean, that's still strong overall, but this looks awful. This looks really bad. They didn't even hold any of the previous day's range there. Crazy. Okay, so we got a weaker Russ. We got a weak Q. And weak, I just mean from this day. I don't mean overall. They're obviously, we've been pumping so hard. Calling them weak is a little ridiculous, but coming in the next week, maybe we'll see some pullback. We'll see some downside. Look at the regular charts here on the internals. So tick, I'm not gonna stay in here too long. While they actually broke negative 1,000 down here on the tick, that's where we had that strong close. And yeah, you can see here the average closures, that purple line, is mostly on the bearish side. And then we get our classic end of day noise trend. So that imbalance that we had printing on MIT roughly around noon, this is why, because we have full bearishness zone. The value of this indicator is all up here in the bearish side. So that definitely aligns with SPY later in the day, where we're finally coming down into the previous day's standard deviation TWAP values. And here's our ad. So remember earlier in the video, I said I can guarantee you when you see the ad band and the triangles flipping red to green, that most likely the ad is in a range, and here's your range. So we're in between negative 1300 stocks and negative 1700 stocks, basically on decline. So the first initial part of our session, from open until almost 11, I mean, it's just decline the entire time. But yet SPY was fighting that whole time. So now we know what this was. This was the Russ and maybe a little bit of SPY, but not much. So the Dow was selling off a little bit. The Q was really strong in the morning session. SPY, but the Russ, right? It's clear. It's clear as day that that's the Russ. This right here is Russell selling off. So this reaffirms the importance of checking all the four main indices at the beginning of the day, especially when we see the ad is below zero and we start getting these fat candles down. Just go check the four indexes real quick, just what's selling off. And then you can kind of keep that in the back of your mind as you're waiting for SPY to come into alignment, or whichever the indexes you're trading. Checking the volt out. Okay. Yep. No other way to slice this other than just straight bearish. They blew right through the bearish zone, and right around 130 is when we went just insane bearishness, right? So we've had how many days where it's bullishness and they're breaking out to the upside on the extreme end. We've seen a ton of that lately, save for this day. That was even worse. But just a ton of that, right? So this is why I say look at the internals. They make it abundantly clear which side, what sentiment is the market, bull or bear. There's no other way to slice and dice this. We start under zero and we're just heading down the whole day. So when we see SPY and it's fighting, why trade it? Just wait till it has alignment. And honestly, after looking at the four indexes for this week and the internals, honestly, I'm almost of the mind of just having a four index layout: SPY, Qs, Russell, and Dow, and just in the morning find out which one has alignment with it, immediate alignment with ad and volt, and maybe just trade that, because really the rest of it doesn't really matter to me. I don't care. Russell has decent enough spreads and premium and liquidity. So does obviously SPY does. The Qs is pretty good. I mean, granted, their fills aren't as clean, but they're still good. They're better than trying to play some individual name that maybe has a horrible spread or whatever. I mean, don't get me wrong. Some individual names are totally just fine for trading options, but yeah, I mean, you could sit here and be miserable waiting for an opportunity on SPY that's fighting literally the entire New York Stock Exchange, or you can just go find out whichever index is causing the red ad and volt, like for example on this Friday, and then just go trade that one. Make it easy. That's that decision fatigue coming into play, right? Is how can we reduce the amount of decisions that we are making during the trading execution? So this one we had a very clear break and retest. I mean, it doesn't really leave a lot. I'll be honest. I use these typically as my targets, so we're already below that. This actually wouldn't have been that great. So yeah, but I still recommend watching all four, or at least taking a peek at them, whichever one you're not trading. I still end up trading SPY pretty much every day. So coming into next week, we've got a down SPY, we've got down volt, we've got down Russ, The Qs ended up selling off at the end of the day, much cleaner than SPY. So I think that fully cements in my head that we'll probably see more bearishness as we come into next week. I'm not looking at futures tonight. I'll just wait until tomorrow to see what's going on pre-market. But yeah, I think I could definitely see us coming back down. And if we do, then what I typically look at are the monthly TWAP levels. So for me, I'm going to be interested in 446, 7, 444 in an extreme case. And then sometimes I'll even take these levels here and I'll draw my fib tool over, mainly just to get the 0.5 here. So that'd be like a 447, which is really close actually to the first standard deviation. Wonder how often that happens. But obviously, if price heads higher, then we're looking at like third standard deviation on the monthly TWAP, which would be a 454, which would be nuts. But we were in that second to third range on the monthly Thursday and Wednesday. We just couldn't keep it. But maybe we'll just head right back up after a small pullback. I mean, we've got this price range here. So I'm guessing somewhere around here probably is where, if there's downside, that's where we'll head to. And then from there, who knows? I mean, the monthly TWAP price is 442.79. So if we head back all the way back down there, then I think we're probably going even lower, because we'd already worked our way through that range a couple times. But we have spent a significant amount of time back above that. So yeah, could be interesting. We still have half of this month left, believe it or not. So those are just my thoughts. But yeah, with the ad selling off, Vold selling off, and the indices largely in agreement, there's no resistance to keep us from going lower. Good luck heading into our next weekly market session. And I'll be on Twitter posting some thoughts as I have time. And thank you for watching. And as always, happy trading.